Okay. So section 2 is unearned income and payments. So we're going to talk about private and governmental sources of unearned income, list the types of taxes levied against individuals, and discuss the benefits of paying taxes. So unearned income is money received from sources other than working. That's kind of the definition. And then that second bullet point there, it's still subject to taxes, but sometimes at lower tax rates. So some sources of unearned income, also sometimes called passive income, are interest. So unearned income, you're not working for it. Interest, which is money earned on savings accounts and other funds. So sometimes if you have a lot of money in an account, a bank will pay you interest just for keeping that money there. Dividends, the definition is a portion of a corporation's profits distributed to its stockholders. So again, if a corporation is doing well and you have stock into it, you may get some of their dividends. Sometimes they'll give you cash and sometimes they'll give you more stock options. Another source of unearned income would be like retirement benefits. It could be from, that's not a definition there. Those are just examples. A pension plan, an individual retirement account, an IRA, or a 401k. Rental income. So if you own a house and rent it out, you may get income from that. And then capital gains. That's what you get if you sell real estate or investments. So say you bought a house and you're no longer renting it out, you decide to sell it, any profit you make from that is going to be called capital gains. That's going to be unearned income. Okay, so you don't have to copy this down. This is just kind of to summarize, and this chart is straight from your book. Earned income, this is what we went over yesterday. That's money you work for. Unearned income is money that you get that you don't necessarily work for. Some things we didn't talk about, like gambling winnings, that's unearned income, and you pay taxes on those if it's over a certain amount. Child support, unemployment, alimony, those are things that are unearned income. Some things you pay taxes on, others you don't. So public sources, also called government transfer payments. So a transfer payment is money and benefits received from local, state, or federal governments. Those are also going to be unearned income. One example is in cash payments, which is money in the form of a check, a debit card, or other direct payment given to a person needing assistance. So things like workers' comp, unemployment, social security, those are in cash payments. They're just giving you essentially cash, more likely in a debit card, and that you can use freely, however you want. So you're paying for this through your payroll deductions, which are matched by your employer. So Social Security is for when you retire, but it's not necessarily enough to live on. So you want to put extra money away. We'll get more into that later, but that's the Social Security is for when you retire. Workers' compensation, remember, is if you get hurt on the job. And unemployment is insurance is if you are no longer working and not by choice. You can't quit and collect unemployment. So in cash payments, they just give you money directly. Then there's in-kind payments. I don't know why I forgot the examples here, which are payments made directly on a person's behalf or paid in a form other than money. Hey, Mommy. Yes, Forrest. So examples of in-kind payments could be like your medical, if they're paying bills or something like that for you. So they're not giving you cash, they're making the payments on your behalf. Medicare and Medicaid. Medicare is for people 65 and older, and Medicaid is helping people with that are economically disadvantaged that can't necessarily afford it. Other things like SNAP or food stamps, reduced school lunches, Section 8 housing, those are in-kind payments where they're kind of making a payment directly for you. Excuse me, sorry, these are types of transfer payments. Again, just kind of breaks it down for you, a type of benefit and who they're paid to. So some of them you can see are low income. This is children or family, needy families with children, veterans, retired people. So just kind of breaks it down who gets what benefit. So to kind of remember, in cash payments, they're giving you money to spend freely. In kind payments, they're paying directly on your behalf. The second part here, what type of taxes do you pay? So we pay sales tax, which is a tax levied as a percentage of the purchase price of goods and services sold to consumers. This is what we call a regressive tax because it's the same across the board. Everyone pays the same sales tax regardless of your income. So it hurts the poor more than the rich. There are states that don't have sales taxes like Oregon. And then sales tax are going to vary by county and even by city sometimes. So you can, these are clickable. You can go ahead and if you want to see our tax rates. So taxes based on consumption. So this is kind of more based on what you use. There's a use tax, a tax charge on the use, storage, or consumption of a good that was purchased in one state but used in another. So again, this is to kind of avoid, since Oregon doesn't pay sales tax, we could all go to Oregon and, you know, buy a new car or whatever we want to buy there to try to avoid the taxes. But then when you come back to California, you're going to get this use tax. And then an excise tax is a tax charged on the purchase of specific goods and services like gasoline, cigarettes, alcoholic beverages, phone service, utilities, garbage collections. If it is charged on an item that is non-essential, like a luxury car or a yacht, it's called a luxury tax. These excise taxes are usually included in the price. So like when you go to the gas station and you see the cost per gallon, these taxes are already included in there. So these are types of taxes based on consumption, how much you're using or buying. Then there's taxes based on income, like federal, state, and local income taxes. This is a progressive tax because the more you earn, the more you pay. So it goes up, it's progressing with you. So this is just an example. Again, it's from 2017, so it is a bit outdated, but it's the marginal tax rate. So single means you're a single person filing your taxes alone. Joint, you're filing with somebody when you're married. So basically you can see, if we just look at the single, if you made less than $93.25, your income tax was 10%. And then you see, as you make more money, look at your tax rate. So if you made over $418,000 and 400, you're paying almost 40% in taxes. So that's kind of just what we're looking at here, is you just see that the more you make, the more you pay in taxes. And then kind of, if you look at a single household for this lower bracket and then joint, it's doubled. But it's not double. That's not the way it works across the board. Like here it's 418,000, here it's almost 71,000. So the more you make, the more you're going to pay in taxes when you file your taxes at the end of the year. And then there's also taxes based on wealth. So not that last one was income. A property tax is a wealth tax based on the assessed value of your owned real estate. So it's typically determined by the county. There's estate and inheritance taxes, which is on property received from a deceased person. So if you inherit money from somebody or some sort of estate, some of their stuff, you're going to have to pay taxes on that up to a certain amount. And then gift taxes are paid by the giver, except spouses and charity. So if, you know, somebody wants to just give you money, a large amount of money, they have to pay taxes on that, whoever's giving the money. Again, there's the exception of spouses and charities. So this is just a partial list there of US taxes. There's a lot of different taxes out there. So hotel occupancy tax. Anytime you go to a hotel, you're paying this. Rental car tax. There's a special tax when you buy a car. Cell phone tax. Your cell phone bill has certain taxes built into it to use things like 911. So lots of taxes out there. That image was from the book if you wanted to go back and refer to it. And then here, how do you benefit from paying taxes? So there's direct benefits. Sorry. So direct benefits are things, so public goods, which is government provided goods and services paid for by taxes, like national defense, police, fire, our public education system, national park. So those are public goods and we all have access to them. And then indirect benefits, like well-educated population raises standard of living for everyone. So basically these kind of other indirect benefits, sorry, he's being really loud today. Things like our roadways and things like that we just kind of don't necessarily pay attention to. But then again, it makes our standard of living go up when we have more education. That is our last slide. We do have 2 math examples we are going to do today on calculating taxes, or sales tax, I should say. I took the other taxes out. So if you want to print that paper again, I posted it in Google Classroom the other day, yesterday. This paper, just these 2 problems. They're very similar. So sales tax, to find the sales tax that you'll be paying, you multiply the total selling price by the sales tax rate. So Ron Engel bought a camera that had a selling price of $129 and a pack of film, we're going old school here, that had a price of $18.95. What is the sales tax on his purchases if he lives in Connecticut, where the sales tax rate is 6%? So the first thing we need to get is the total selling price. Total, remember, means addition. And we're going to add the cost of the camera and the cost of the film. $129.99 plus $18.95. So before taxes, Ron would be paying $148.94. So to get sales tax, we're going to take that total selling price, $148.94. We're going to multiply by the sales tax rate. And again, remember here, 6% is 0.06 as a decimal. So this would be 0.06. Not 0.6. If it was 0.6, that's the same as 60%. So 0.06 because we moved the decimal spot 2 places. So if we multiply by 0.06, remember money, we're rounding to 2 decimal places, so the sales tax would be $8.94. So this just wanted to know how much he had to pay in sales tax. And that's not necessarily very helpful for us because we want to know how much money we're spending total, which is what we're going to do down here. So a store in Trenton, New Jersey advertised a smoke alarm, for $24.95 and a fire extinguisher for $39.95. What is the total purchase price if the combined city and state tax rate is 6%? So basically we have to do everything we just did in number 1. So the total selling price would be the $24.95 in addition to the $39.95 for that fire extinguisher. And again, notice my calculator made it 0.9. Make sure you write that as 0.90, 90 cents. We still have to calculate the sales tax. So same idea, we take the total selling price and multiply by the 0.06 again. It was still 6% in this example. So the sales tax is $3.89. So the total purchase price here is the price of the products, the $64.90, plus the tax, $3.89. So $68.79. So in number 2, this second example is a lot more realistic because you really care how much money you're paying when it comes time to check out. Up here, sure, the tax is almost $9, but you really just want to know how much money is coming out of your bank account. So you need to be able to calculate the sales tax and then go back and add it to the cost of your items. If you were ever in a store kind of just trying to figure it out on your own, a general rule of thumb would be to round up to 10%. I think we'll do some of those examples. Those are more realistic California sales tax rates rather than 6%. I think ours is 8 point something. So you could always just round up to 10% to make it an easy calculation because you just move your decimal. So let me just double check to make sure. I think that's all we have for today. So before you go though, I want to kind of point out a couple of things. Again, your test next week is on Tuesday during class. Oh, yesterday, the homework posted said number 19. I said it in class that it was 1 through 19. It posted and just said number 19. Make sure you go, if you only did 19, you need to go back and do 1 through 19. Tonight's homework is 1 through 21. Tomorrow we're doing section 3. Friday, you do have an assignment as well as turning everything in and getting caught up. It's just that vocab worksheet that most people finish in about 15 or 20 minutes. So if you didn't want to have the work to do on Friday, it's already posted in Google Classroom. You are welcome to access that now and get started on at least the vocab and everything that we have done. But that is all I have for you guys unless you have questions. You're free to go, and I will see you tomorrow at 1 o'clock.
Thank you.
You're welcome.
Thank you.
Have a nice day.
You too. Thank you.
Miss Rice, are the notes posted in Classroom that we did today?
Like the PowerPoint?
Yeah.
Yes.
Okay, and what problems do we have to do in the book? 1 through what?
1 through 21. That's posted where the PowerPoint's posted. It also lists all the problems.
Okay, thank you.
You're welcome.